What's up, and welcome back to Funds on Fire, where we tell the real stories behind capital raising, fund management, and building financial empires that last. Today's episode isn't just inspiring, it's a blueprint. You're going to meet Igor Shaltanov, and if you've ever wondered what grit really looks like, this man defines it. Now, picture this: a professional water polo player from Moscow. Yes, I'm talking about right out of Russia with a law degree. You followed the traditional path, but something inside you says, this can't be it. You want something different, something warmer, literally and figuratively. So one day, you and your wife board a plane to Los Angeles. You land in November and it's 70 degrees. Kids are barefoot on the beach, and you realize, I've been lied to my whole life. People live like this, and that moment cracks something open. The crack eventually becomes a fund. That is literally Igor's life. And today, Igor runs A Vista Funds, which focuses on multifamily housing, land development, and even organic food companies. He raised 18 million in his first year here. And what I love most is what he didn't do. He didn't raise capital from day one. He didn't come in with a hedge fund experience or a Stanford MBA. He didn't come in with a Wharton or Harvard education. He didn't pretend to be something he's not. He just did the next right thing over and over, first in youth sports, then in real estate, then in funds, and it worked. But here's what hit me the most. Before Igor ever raised capital from strangers, he had to raise the belief from his family. He had to convince his own mom to rent out their apartment in Russia and move. He had to sell the vision of real estate cash flow before he even knew how to structure a deal. That right there, that was his first capital raise. And I want to pause here for just a second, because if you're listening to this, I want you to know something. That same skill Igor used, vision, clarity, conviction, that's what we help you build inside of our Fund Founders Founder Circle community. We've built the Founder Circle for people just like Igor, people who don't have a private equity background, who didn't grow up around wealth, or who are trying to figure out how to raise capital, build a fund, and do it right without blowing 30K on legal fees or wasting a year on YouTube University. Inside the Founder Circle, we give you everything step by step: fund launch training, your full legal docs, structure and support, a community of real fund managers doing real deals, weekly coaching calls for strategy, accountability, and momentum, and an AI powered CRM that literally automates your investor pipeline so that you can raise capital on autopilot. So if you've been spinning your wheels, stuck in the idea phase, or too intimidated to take the next step, this is the part of the episode where I say, stop waiting, apply for the Founder Circle, and join the group of auto operators who are actually doing the thing. You can head to wearefundfounders.com/apply, or just click the link in the show notes to learn more. We don't just teach you how to raise capital, we help you to become the kind of person that people want to invest with. Now, back to Igor. One of the things that he said that stuck with me was, everybody has a dollar, but nobody invests it. And it hit me because that's the world we're operating in. There's capital everywhere, but trust is the currency. If you want to raise capital, you have to become trustworthy, not just in your documents, but in your decisions, your discipline, and your track record. And Igor has all that. He's done it, from coaching kids on the court to building a real estate portfolio to raising eight figures through a credit fund and managing hundreds of millions of dollars in his fund. Today's conversation is going to walk you through how to shift from operator to fund manager, what he learned from losing a deal and how it made him better, how he raised capital before he had a fund, and why he's diversifying into organic food companies and how it hedges risk, and how he teaches his kids the realities of investing, including how to lose money. So, whether you're just starting your fund journey or you're already raising capital and trying to scale it up, I promise you this is an episode you're going to want to take notes on. So, let's get into it. Here's my conversation with Igor Shaltanov. What's up, and welcome today. I'm so excited because today we have Igor Shaltanov on the show today. And I got to say, I've enjoyed keeping up with Igor. And one, he's got a really awesome podcast where he actually talks to other professional athletes about investing. He talks about his journey, and I just like following him on Instagram, and that's where I connected with him initially to get him on the podcast. I like seeing the time he goes out and he goes to basketball games and stuff with his kids. He's out there playing golf, and I kind of get jealous because the courses you play at are gorgeous, man. And so I loved keeping up with you and listening to the podcast, and I'm just excited to have you on the show here, man. And so thank you for being here. And I love to just get it going a little bit on, like, because you've got an incredible story that I actually don't know many. Actually, I actually don't know. Oh, I do know a couple, but I don't know many people that have come over here, it's like from Russia, and then made a new life for themselves, and then absolutely crushed it in here. And so I'm just really excited to talk about that and hear a little bit more about you. And I think our listeners will be too. So give us a little bit of a rundown who you are, where you're from, and what you do, man.
But yeah, that's a big story. So thank you, David. Thank you for having me. And I'm absolutely excited to share some of the things. I started in Moscow in Russia. I was professional water polo player. Coming to United States, and not a lot of people actually played water polo. It's not super popular sport. But then, so what happened to me, I thought I'm going to chase the money, and then I just actually finished the law school. I became a lawyer in Russia. So I was working 9 to 5 job. I since realized, you know what? This is something I don't want to do for the rest of my life. My wife said, You know what? Let's visit my family," because her family moved to the United States. So let's visit my family and let's check it out. And my thing was, I was like 9, 10 years old, right? Coming back from practice in Moscow. So it was like freezing cold because I was taking subway. I mean, it's metro, right? And took me about probably like 50 to an hour, right? Traveling down, right? And it was so cold. It was so windy, right? And then I was like humid and I was just miserable all the time. And I come back home and I say, Mom, you know what? I want to move to the place where there's no winter. So, and she was like, okay, let's do it. So, and then I was like, keep saying that day after day. And then who knew, like 15 years after, I'm going to be in California, in a beautiful place. And like I said, my wife said, let's go visit my family, and her family was in Los Angeles, California. And in November 2010, we landed in Manhattan Beach. I don't know if you guys know the area. So, but it's a
Oh, yeah.
beautiful place, and it was -10, I would say, in Russia. It was like snowy, and it was like a flip-flops and beautiful beach, right, in Manhattan Beach, California. And it was like, oh my goodness, I felt like I was cheated for the whole life, and people can live like that, and everybody like settle down, everybody like barely moving, and the kids are like naked, right, on the beach. And it was like such a dream, right, come to
Oh,
reality.
yeah.
And it's a little
That's
bit of
awesome.
change, right, from Russia.
That's like a stark difference. Now, what's very interesting, I'm actually from LA. So I'm from California. So when you said polo, I was like, oh, of course, USC. Probably like the best water polo team in the country by far every single year. And so I was like, I wonder if did you ever go to any like USC water polo matches or anything like that?
Yeah, the fun story is, USC and UCLA as well, so maybe UCLA a little bit even better right now. But what I'm saying is there's only 2 players in the history of water polo, like the world history of water polo, played in Russia, and then one of them happened to be the UCLA head coach for the last 20 years, 15 years, not 20, 15 years. His name's Adam Wright. So the story was, when we filed the paperwork for USCIS, right? And we claim, so we outstanding athletes, blah, blah, blah. And we're like on the world, the stage, and everybody knows us. They said, you know what? If you guys claiming that, who knows you from United States? I was like, oh my God. So what are we going to say now? And then I was, oh, I played with Adam Wright. And I call my, buddy, I text him, so I say, "Hey, Adam, so I got in trouble, so yes, yes, asking me for the proof of, recognition. Can you give me the letter?" Right? And he was like, "Oh, of course I can." And then my wife actually played professional basketball, and then she played with all the superstars of WNBA, and we did the same thing. It was Lisa Leslie back then, the first woman who actually slam dunk an official game.
Yeah, Lisa Leslie. Oh, she's the GOAT.
Yeah, she's incredible. She's amazing. And then, and her husband Mike. So, and then we asked that same thing from Lisa. So Lisa like, of course, because we'll spend the time together in Moscow, right? We'll show him around and stuff, without actually knowing we're gonna move to United States and we need any type of help or support. And then we reach out to her and she's like, yeah, of course, we're gonna give you. And so, anyways, what ended up happening, Isa Leslie on her letterhead gave us like a letter, and then Adam Wright on the UCLA letterhead gave us like support letters, and then we just got the green cards within 2 months. That was the great story.
Yeah, what other like
UCLA.
probably the next best endorsement is the president after that. I mean, like those are like the best.
Yeah. Anyways, and then you asked me about the water ball game. Since then, so every time I reach out to Adam, so maybe not every year, but then I go to the final games. And last time was UC Berkeley against UCLA. So, and it's just really high quality water ball. I enjoy that every time.
That's awesome. Now, one thing I do also know about you, which is really cool, and now hearing that part of knowing that your wife was a professional basketball player, because when you came over here, you didn't just jump into real estate. So you were an attorney, and then when you came over, you actually started other businesses, right? And other businesses around what you're passionate about, which is athletics, and even specifically what your wife is passionate about is basketball. So like, what was that evolution like moving there and doing that?
Yeah, that's a great story as well. So thank you for asking. And I think the beginning was I was by first educational right background. So I was the PE teacher and coach. And actually we did internship at school. I think it was like 2 months or 3 months. And I really loved every second of that. So the disconnect was you cannot survive if you PE teacher in Russia because you might make like $50 per month, right? It's like a very like underrated job, like, and same probably in the United States as well. So, but then when we opened a basketball academy for kids, because we had the name, her brother was drafted by NBA team, so we had that name of NBA, right? And her dad was coach for the USSR and Russian national team. He was a player and then coach for the Russian national team. Anyways, so we opened that basketball academy. So the teaching connected to the basically. And what we did, I didn't even work. So we were doing the passion project. So we just really were helping kids to develop into something that we call it like develop great athletes, but greater people. So we were actually teaching them through these sports how to become more persistent, right? How not to give up, how to stay on the same focus. Anyways, there's all of those applications of sports, which is, translating into your real life and you become a really successful person, not because you're exceptional, just because you don't quit, right? Because you're more persistent than others, because you have that internal push, right? And the power to go through the challenges and stuff. So what I'm saying is by having that business, right, and teaching kids, so I just completely fulfill my passion, internal
Yeah.
passion. What I'm saying, the people feel it, the genuine like, emotions and passion, they feel it immediately. So the business start to grow crazy.
And when you have that genuine like passion for something, you're right. People understand it and feel it and they get behind you. And I'm sure that has led into one like raising capital and launching the businesses that you have. When you're passionate about something, when you feel strongly about it, other people want to follow you. And even just transitioning a little bit into real estate, I know that just from listening and hearing things on previous things that you were on before, going back to like 1994 in Russia, you've talked about someone explaining to you that you could actually get paid for living in your apartment, and like that's where this whole idea and the mindset shifted of like, wow, real estate can actually change your life, and so that almost was like the little bit of the, I guess like the embryo, like like I guess
Heard that?
the beginning, yeah, the beginning of real estate for you. And so, like, take us back to what it's like because, like, I have no idea what it's like to be a kid in Russia. I have no idea what that looks like. And for you to go, we can rent out our apartment, real estate in Russia, and then now transitioning that to America is, I'm sure that's a really interesting transition and even this mindset shift for you.
Yeah. Yeah. That's a great question. Thank you, Devin. And the story began when one of my friends, and I probably like 10 years old, 9 years old, one of my friends saying, I'm going to go out and pick up cash for the apartment. I was like, oh my goodness, what does that mean? Because if you think about the 1994, 95, 90s, right? We just went through this civil, basically revolution. I would put it this way, right? It was 1991, 92. It was really, really tough times. Not to say you can't really find online. There's no YouTube, right? There's no internet as much. What do you also the only reason, like, the only way you can learn is just from your peers, basically from your friends. And then when I hear that, so we have an apartment and we actually let the people live there and we received cash for that. Back then, there and then, just, travel in time. So that was just mind-boggling idea. So I didn't know that. My parents are not coming from real estate background, from investing background. So my dad was like police officer, and my mom was doctor, just very classic family. So, but what I'm saying is when I hear that, it just stuck in my mind. So, but I still young. All right. And then, fast forward when we had that first apartment, I was like, Mom, listen, so we can rent it to the people. So I heard there's an idea if you can give it to people, they'll pay you for that, which is incredible idea. And the reason why, because all of it's not leverage, it's all cash paid, right? You can't
Mhm.
get the mortgage back then. So it's all has to be cash, right? If you got an apartment, it has to be cash. So what I'm saying is all you get and all the revenue, whatever income you get, and it's just free and clear. And there's no taxes as well. Because there's nothing like real estate investing back then for people. Okay, back after that. So when we received the first check, remember, so first of all, it took me about 6 months to convince my family to move to a new place because we just got a new place. model that. And then so they said, "No, we're gonna stay in our older. We got used to that. We love our park neighbors." I was like, "Yeah, that's true, but you got to, you guys deserve it. So we've been there for 20 years, right? It's all beat up, right? We can, actually give it to the people. They will leave it, but you experience some new stuff." Anyways, and then once I convinced them, and they actually really loved the place, so I remodeled that other place, the older one, and then I gave it to the two boys, which is they were actually lawyers, and then they were splitting that payment, which is easier for them to pay monthly, right? They were in two different jobs as well. For me today, I was like, wow, that's a brilliant idea, right? Because you just diversify that income from other people. So, and that's two people, it's not one, which is burdensome, maybe some days or months, right, to pay that rent. So, and it worked perfect because once I received the cash monthly, right, that big pay cash, right, for me, it was the equal, like, of my mom's salary for a month. And
Wow.
her mindset for sure, because her mind was like, I'm going like 9 to 5,
Yeah.
5 days a week, right, to receive the same amount of cash. And then she's like completely changed her mind as well. I'm going to stop here.
Yeah. No, that's great. Oh no, man. The stories is what makes this because I think there takes honestly for you and as I've like heard your story and as you're explaining it, it takes a sense of like persuasion and patience when you're dealing with family and trying to get them to get on board with what you think is right. And it sounds like as a teenager, I mean, you probably had to come to your parents who I mean, probably very logical people, doctor, police officer, and you had to come to them and go, "Hey, this is the plan. This is why I think it could work." And this is where we are now. And I'm sure, honestly, that was like the catalyst for you in learning how to raise capital for investing. You literally had to convince your parents to believe in your real estate dream right there. And then it paid off. And I'm sure in that moment, there was a huge mindset shift there, which is really cool to even think about. So I think that I love that part of your story. So I think that's fantastic.
Yeah, I think that's again, it's probably came from sports. So because my mom was keep saying, "So we're doing mistakes, so this is wrong. We're not supposed to buy another one. So this is the wrong mistake." And then it took me about 5 years still buying like real estate and then renting. And she was helping me actually to manage this. And then once we sold the first apartment and she got a millions of rubles right in her account, and she was like, "Wow." I was like, "Yeah, that's a mistake we were doing for this 5 years."
Yeah.
And then she's saying that's a mistake. It took her about like 5 years to really transition into this brain of, wow, we can invest, we can actually work now and then delay gratification, delay that, paycheck and stuff like that. And then once you sold it, you really get like big chunk of money.
Yeah. That's awesome, man. I love that you just talked about this idea of delayed gratification because you've got kids, right? How many kids do you have?
Three right now.
Okay, so you have 3 kids, which is incredible, and you've got 3 kids, and one thing that I've heard you say in the past is you've talked about this idea of just, like, slow and steady, don't lose money. Do not necessarily a safe thing, but something that's gonna be consistent, something that's going to be lower risk, boring, but and it delays gratification, but has a bigger payoff in the end. And so for you, I love always bringing it back to kids because, 1, just the parallel between you going through that process with your mom, her realizing it, and then now you as a husband, a dad, a coach, and a fund manager. Where do you see those parallels are? Like, how do you manage the tension between being a founder, a coach, a dad, a husband, and has that helped you? I guess like has along the way the stability of what you've built helped teach them those lessons?
Yeah, that's a very deep question, right, Devin? Thank you. So I think I don't even know what to say, but one thing is probably leading with an example. That's the biggest piece for with the kids that works really well with kids, as well as with a coach, right? Because kids, actually, you might think they don't know, you might think, but they actually feel you. Like whatever you tell them, and if it's not true, they understand that, right? Something internally deep, right, in their minds or whatever in their body. So what I'm saying here, leading with an example, and one of the examples will be right. So you're not chasing like a 40, 50% return, as some people do. They say, "Oh, we're not going to invest unless it's like 40% return." And then you tell them, "So yeah, good luck, right? So you might work
Mhm.
one time, but then 5 times out of nine, like 5 times out of 10, right? It's not going to work. And then you lost even more than you just gained." Um, Being able to understand, because you probably still want to fight for double digit return. You don't want to settle for like single digits. but there's a places where you can be actually really secure and then really low on risk on capital stack, and you still get this double digit return. And if you think through that double digit return, so that means your money actually, growing fast. You're not just keeping them on a bank account, right? Because one of the probably default choices to just keep on a bank account. And then what are they paying you right now? So they probably, if you go to the bigger institution, right, nothing, right? But if you go into a little bit smaller, they might pay like 3%, 4%, right, on your money. But then I was always thinking through that. And I'm telling my kids, think through how many years it's going to take you to actually double your money. Let's say if you got $1,000, right? How many years it's going to take you to get to 2,000, right? And then, so in my mind was, okay, if I can actually master that thing, if I can keep my money secure and they growing and double digit return, and I'm not losing them like 5, 10, whatever the years for yourself, right? Whatever the horizon for yourself. So now you can start to chip in, right, the portion of it and say, okay, I can take more, all right, the risk was maybe like a 20%, like 30% return, a little bit more, right? Like
Mhm.
less of the portfolio, right? But a little bit more of the risk level, right? And I think what I'm teaching my kids as well, for example, in sports, that's a great perception example, right? By you sticking to the sports at the age of, let's say, from 14 to 17, by you just sticking and then going to practice every single day, 90% of the humans will quit by any the reason, whatever the reason is, they will quit, right? By you just being persistent, waking up every morning, doing the routine, right? Going to the practice, right? Without any meaningful results. So you're gonna beat 90% of the people. Same as investing, by you doing investing like every month, every 6 months, whatever your schedule is, whatever your financial, you know, ability or capability of that. So you're gonna beat 90% of the humans who don't do it, right? Because everybody has $1, right? Everybody has $1 a month, whatever, a year. Again, your schedule, a day, whatever. So, but nobody is doing that. You just need to understand one fact. Nobody is taking the risk, even on the $1. Everybody, every single human, right, can afford to invest $1, but they're not doing this. So by doing this, you already beat 90% of the people.
So do you so, like,
And
do
that
you
$1 in years become a big number.
Yeah, there's no doubt. Like, so do you teach your kids? Do you, and I don't know how old they are, but do you teach them about investing, the importance of investing, even just that $1, setting aside money from the things that they make to invest it? Because you don't want to leave it into an account. What's a CD going to be 3 or 4%? And they don't have CDs. And so, what's like, do you, are you actively helping them to understand the concepts of investing? And if so, what does that look like?
Yes, I do. And actually, I want to expose them to the most risky things right away. And the reason why, because I want to make sure they understand they lose money. They just lose. They had like 1,000 and now they have 300. And the reason why, there's certain reason for that, right? And then they need to analyze and they need to start to realize you can actually lose the capital, right? And I would rather lose right now for them when it's just 100,000 whatever dollars. Then they're just gonna grow and they're gonna start to chase that shiny things again, right? So, and one of the examples will be like I gave my older son, the account was a Robinhood, right? You can buy some crypto there. So, and there's some, and he was, oh, I'm going to invest in this. And yeah, and because he saw that on Twitter or whatever, you name it, right? Um, Snapchat, right? And so, yeah, of course, absolutely do that, right? And then by him doing this and like losing 70% of his portfolio, that's probably the best example of his younger age, because now he start to realize, you know what, this might be different way to do that, right? There's might be more delayed gratification idea, or there's might be more like a safer investments, right? And then, maybe you can translate your gains into something more risky, right? If you have an idea, if you have some, but yeah. So this is my approach for now, for today.
That's really good. I think that probably also stems because as I think about you telling that story and I think about the lesson that you want them to leave there, I think that's also an extremely, extremely valuable lesson for current fund managers as well. And correct me if I'm wrong, but I think you went through a season where you actually lost money on one of your funds. And I think it's an important lesson to learn because nobody's I mean, for me, my fund was tough last year. Single family real estate in the US was tough last year. And so people go through these ups and downs. And so for you, as you went through that season of your fund, I guess what was one of the biggest lessons that you learned in that season? And like, how have you applied that to now as you currently run the funds that you run? Because we'll start to jump into the real estate and, of course, like the AUM and how you're raising capital and all that stuff. But I think what's more important is the lessons that we learn when we fail or when we don't succeed like we think we're going to.
Yeah. Yeah, and that's a great question. Thank you, Dan. So I think one of the biggest ones, I think all the deals was X factor, right? This something you cannot control. In this case, it was just the interest rates hike, right? And then the deals which is not locked in. Because and again, it's basic greed. If you're talking about why it's a greed, right? There's fear and greed. There's only two emotions, right? Which is driven always and driving the people, right? And when you look at the deal and it says 2.970, like whatever, 3.5, and you're not locking that interest rate for next 5, 7, 10 years, right, in a commercial loan. Now the question is, what are you actually dreaming about, right? What could get better than that?
Yeah.
So, and that was our mistake as well. So, because on some of the deals, we just adjustable rate, right? And sure enough, I mean, again, so majority we did like a fixed rate because we understand. So, but then some of those, okay, that's fine. The deal looks so good, the numbers are penciling out really well, so we got some cushion. But not going into the deals was X factor you cannot control. This is the biggest lesson, like, because you cannot control that thing. You can control everything, but not this, right? Because there's a Jerome Powell who say we're going to do this and that tomorrow. So can you influence that? No, right? And then for today, we're like, okay, we need to actually fix the things. We need to actually make sure we're going into the deal, which is under our control more than we're just betting on the future and saying it's going to go to this or that. It's going to go down, up. That's a basic gambling, right?
Mhm. Yeah, that's right. And do you feel like that's caused you to kinda diversify? Because and I guess we can take a little bit of a step back. When you came over and you got into real estate, when was the point that you started really scaling up to where you were doing larger deals, larger multifamily deals, raising millions of dollars? And then even, like, were those first investors people that you knew or, as you came over? Because you mentioned Lisa Leslie and the coach for UCLA, and I was like, "Oh, man, Adam Wright," and I was like, "Man, did you go to those guys to raise capital, or was it somebody you didn't think it would be?" And what was that process like for you as you began that journey? Before we continue, I wanted to tell you about something that's been an absolute game changer for fund managers and capital raisers just in general. If you're trying to manage any investor relationships with spreadsheet and scattered emails, I want to introduce you to FundFlow OS, the intelligent capital management platform that's transforming how capital raisers raise and manage capital. FundFlow OS gives you everything you need in one powerful platform: investor CRM, automated deal pipelines, distribution tracking, document management, AI powered tools that help you crush investor relationships, conversations, and close more deals. Whether you're raising your first fund or managing syndications or doing fix and flips or trying to raise capital to hold properties, FundFlow OS streamlines your entire workflow, track investors' commitments, automate follow-ups, generate professional reports, and even provide your investors with a branded portal to view their investments. Heck, if you're even lending, you also have a lending portal that you can have when you lend out your own money. Plus, the built-in AI tools, you can generate compelling fund summaries, craft persuasive emails, and get instant answers to complex investor questions. The best part, you can try everything completely free for 30 days. That's right, a full month to see how FundFlow OS can transform your capital raising process. Just visit funflowos/fire, that's FIRE. No credit card required. Stop managing investors like it's 2010 and step into the future of capital management with FundFlow OS. Go to funflowos.com/trial and claim your 30-day free trial now. Now back to the show.
Good question. So I think the first one I'll respond to is diversification, right? For example, in 2022, right? So we start to understand if we fight in something we don't know how to control, we can't control that thing. So let's get into the deal, which is eliminate that factor. So we're gonna go into like full equity deal. So what we did a land entitlement deal, which is again, you cannot finance that because it's a land, right? And then bank will say, you're not going to entitle that. You're not going to do this. You're not going to get the permits, right? It's not basically financeable a lot of times. Not to say you're more flexible with sole equity, right? You can do this. You cannot pay this. You can just postpone it. You can say we need to wait another year. So what I'm saying is we shifted from something like leveraging right into the bank. So we said, okay, we're going to do full equity, right? But we can
Mhm.
just still earn really good return on that, right? And that's one. The second one, I did not start with people I know as much, right? But then people started with us. And the reason why, because they saw me kind of succeeding on every stage of my life. Okay, so you're a professional athlete. Was it just local team and then you play some AU whatever? No, it was like the top level, right? If I'm going hard at the top level. So I was like the best of the country. And then so I opened the business. It wasn't like a mediocre business in the middle of nowhere. No, it was like one of the biggest, the largest,
Yeah,
the best
nice.
ones. So
So
and
you have a
what
track record.
yeah, when you shift over, so when you open a new company, what is your vision? Like being like really small and then playing safe? No, it was like go out, right, and be the best. So what I'm saying is here, people who saw my journey, so I didn't even know how they found me, right, or what they found, right. So, but they reach out to me saying, "So what do you do next? So can we be part of this journey?"
Yeah.
Reason because we see you succeeding, right? It's not like you know, it's not the coincidence, right? It's been something you're doing on a daily basis and it's working now.
Yeah, the consistency. People see the consistency. They see that you're consistently making either asymmetrical risks or you're doing things that stay within your zone of genius. And because you have that consistency, they see you continuing to win, which is great. And so I bet that made it pretty easy when you went out and tried to raise capital because you had a pool of people that had seen you winning and they'd seen you winning across the board from land entitlement to running the basketball thing to doing millions of dollars in real estate. And so for you now, that all of that has led to where it is now. What does your current fund look like, and what how do you have it structured, and what are you primarily investing in, and then what does that look like for investors that invest with you?
Good. Yeah, that's a good question. So we still structure. We're not getting into the fund structure like when we get the pool of money. We're still getting one-off deals.
Nice.
And, we still focus about 90% of our time. I would say probably 80 to 90% of the time. It's multifamily real estate. And the reason why I always say the same thing, right? People need a place to stay, right?
Mm-hmm.
So the AI will not gonna change the world of where the people staying, at least for the next 1,000 years. And it's been working for the last 2,000 years. And then we're never gonna be able to just replace the place where you need to stay overnight. And the reason why, because your brain cannot function 2 days in a row without sleep, or 3 days in a row without sleep. You gotta get the place to stay to sleep overnight, get some rest, right? Come back to whatever you're doing again. So that's one. And then that's why the fund is focused on multifamily. Why? Because I mean, by far, it's one of the cheapest ways to live in the United States. The most affordable thing to live, it's apartment building. So, and it could be a little bit more luxurious, could be like on the lower end or at the sea or wherever the class is, but you still need a place to live. And then this is the entry level, right, for the place to stay in the United States. So that means the government will support and the bank system will support. You can leverage that. There's, all the application of that business, right? You can be part of. So on the second side, like we partner with a company so who's doing the organic foods. So one of the biggest challenges when I moved from Russia, Europe, and that side, the quality of food, it's just so much different, right? I don't know if you ever travel to the Europe and then you get like I don't know, let's say strawberry, right? Just the one strawberry, and then it just bursting was a taste, right? Not just a taste, it bursting with nutrition, right? Because it's very nutrient thing.
Mm-hmm.
So, and then when we moved here, because you got like multiple crops and it's going so fast, right? There's a less nutrition. It's really good stuff still, right? And basically the other challenge is like the more healthy you want to eat, the more expensive, right? It is. Like if you want to buy organic, it's like a double of the price of like whatever the food they sell. I don't know, non-organic or whatever you call it. So what I'm saying is, so I was always very conscious of what I'm putting in my body. So it was very close and dear to me to actually invest in the food business, meaning so they're organic food. So one of the examples will be I don't eat milk as much, right? There's a coconut cold company who invested in 2023, and it was just an idea back then. So they were probably $8 million revenue back then. And so for me, I don't eat milk, right? But I need the lactose free diet, I would put it this way, and I need the probiotics in my body.
Mhm.
Probiotics coming from that yogurt is just 50 billion per just a jar SKU, right? Inside of that little jar. So when you get one spoon in the morning, you feel yourself different, right? Your body feels different. You kind of going with a full power. So what I'm saying here, we start to diversify in those companies. And again, being a business owner, I don't know if you guys ever seen the statistics. 94% of the businesses in the United States will never break $1 million revenue.
Mhm.
And so when you understand that, you're looking at the business who a little bit above that number. So it's going to be hard to fail. And they got distribution in it, and then they got a product, they got a proven demand in the stores, right, on the product. So all you need to do, David, what? You just need to scale that, right? So if there is a demand, right? If there is a shelf, right? So if they buy in within 1 or 2 days. So what we say in that company who started in 2015, I think here they're almost like a 35 to $50 million revenue, right? Company. And the reason why, because there's demand and all they need to do just scale operations. So we start to look at those things. But again, it's not the general narrative. It's only 10% of our portfolio. Because again, if you, let's say, make an example, making a good gains, right, on your deal, let's say you put 100 grand and you got all of a sudden in 5 years, 200 grand. And you telling yourself, okay, I can go in real estate again, all in, but I might be, if you got, through a couple of cycles, now all of a sudden you got $500,000. So you say, okay, let me chip in like 100K into something else, right? And again, looking at the market. So do you want to invest in the market when it's not actually
Yep.
favorable? It's a little bit harder, right? There's a less deals, there's a less velocity, right? You might just invest in one deal a year, not like in four, like back in the good days. But then you start to look at different things. And then do the people need to consume the food? Yes, they do. If we're going into the bad times economy, will go through the cycle. So do we, stop eating? Not. So the COVID-19 was a great lesson to learn. So you still need a place to live, right? You're not going out, right? You're not
Mhm.
going into space. So, and then you need to eat food. So those two categories were doing really, really well, right? The real estate was doing well. So even so, a lot of people saying, so the apartment bills will be completely like, crashed and stuff, right? And going to go through the down cycle. No, it didn't happen. And then the food was the biggest problem, right? Because we need to go out and buy food and consume food because everybody's staying home. They actually eat more than less because they just not busy as much. They looking through the body. Oh, I want to get some food. It's kind of entertainment style as well. So what I'm saying is here, that this is diversification took place, and the reason why again because those are the big two things. You need to eat and you need a place to stay always.
And they both sound like something that you're passionate about. Like, you know that somebody and essentially you're hedging against any sort of downturn. And I actually just did a podcast episode where I broke down literally the full life of Ray Dalio and what he did. And that's what he created his all-weather fund for, was literally to diversify against anything that could possibly happen in the world. And so the two things that you're talking about is everybody's always going to need to eat. Everybody's always going to need a place to live. And so for you, you essentially did like a mini version of the all-weather fund where you're diversifying your investments, but like not over leveraging in any one place. Only 10% of your portfolio here, only, 50% here or whatever, to make sure you're well diversified so that you don't lose massively in any kind of market. And I think that plays really well as people kind of listen to this and they go, wow, this guy would be a pretty dang good fiduciary of our money if we needed him to be. And so I think this it blows me away because I think about in your first year, I think you raised something like 18 million in your first year. And do you feel like the track record that you had before then, the sense of caution and the way that you diversify and think about your investments, do you think that played a role into you raising that much in your first year? And then honestly, a lot of people that are probably listening to this podcast want to be like, well, how did you raise $18 million in your first year? What was that like? What was that year for you like as you were raising for that either that syndication or that fund that year?
I mean, it's not just me; it's a company, right? And then there's You're talking about 18 million. It was more of the credit fund, right? Because this is the secure products. We're talking about the private credit fund, and the biggest window of opportunity was when the conventional loan tightening happened. Meaning, if you go to the bank and the bank telling you, you know what, you're not qualified. And the reason why, because the market shifted, right? And the valuation of your apartment is not even close to what you guys purchased for. So it was valued at 20. Now we can give you only like 15, right? As a valuation for your complex though. But then they say, can I refinance? Of course you can, right? Just bring us $3 million. Why? Because you want to close that gap. Remember, you mentioned that gap funding. So, and that actually opens the window of opportunity for the private credit fund. And then for our investors, because I'm looking through the both sides, right? The customers, for the customers as investors. So it's a great thing to be lower on the capital stacks that burn in the multiple deals. So you're going through investment 22, 23, right? There's a capital calls, and then we need to save this building, that building. Can you guys send us like a 50% of you guys actually put in initially, right? To investment. They said, yeah, that way we can just either push the can down the road or maybe we save the apartment. You don't know actually what's happening, right? You don't even actually know what's going to happen. So, because some of them truthful, some not. So some of them just, crazy and they just burn down right away. They just lost the whole portfolio. Like not a lot of them, but actually 3, 4 groups, they lost like thousands of units, right? They just put it on the market
Yeah.
and they just gave it to the lender. So what I'm saying is here, if you went through that cycle, you're like, okay, I want to be a little bit more cautious with my money. So what is the next option? Like, it's still, I don't want to go back to the bank because it's like a too brutal, right? So you're getting probably 0.01 or you get like 3%. If it's a little bit more like risky bank, like a smaller bank. But again, so you don't want to be there. So, but you still want to be on alternative investments, but a lower on the capital stack. I'm talking about the risk level, right?
Yeah.
If you're in a full equity participation, that's probably the highest risk by far. So you could be as a like all the way down as a debt financing, which is the bank. Can you be the bank?
Mhm.
Probably not again. So, but then if you're the private credit fund, so this is the opportunity. You're going to be right next, right in position after the bank, right after the lender. So with certain rights. And this is exactly what we did. So the market responded. So meaning there's a demand for the product. You want to make sure you put in the right product, right, in the time frame as well, right? Because everybody burned down an apartment complex. If you just keep pushing the apartment complex, the people saying, listen, there's not a market for that product. So can you give us something else? So that was the shift. And that's why the amount of money probably right reflected as well.
Yeah.
So that's one. The second one, again, the people understand once they put down the money and you start to receive the dividends within 3 months. So that's very easy to judge. So you start to understand, so, okay, it's working and they're receiving the cash. So we can trust that fund, we can trust that person, whatever the company and stuff like that. So whether when apartment complexes in 2022, 23 happen, everybody stopped distribution. They just paused that. Some of them paused for temporary, right? Some of them paused forever. And they said, listen, we're not going to distribute anything. Why? Because there's not enough cash flow. We're building that fund inside of the project. So just to save it, right? Or maybe refinance that within the year, stuff like that. So I think what I'm saying here is I think the market dictated, right, what's the product is going to be next. And you got to listen to the market trends and really
Yeah.
understand what's going on.
That's great. I mean, it sounds like you've been pretty good, and I think this is also a really important. I think this is a probably one of the most important qualities or characteristics of a good fund manager is the ability to adapt. And I think as an athlete, you know this super well, and I can see this in you. And I think because I think I have this saying, and it's not the most prepared team, it's not the best coach, it's not the best athletes that win the game. It's the team that adapts the best at halftime that wins the game. And so I think for you, you almost in real time had to look at what the market was doing and react to it. Nobody wanted to get into multifamily. Nobody wanted to do that because all these massive bridge loans were getting called due and people were bankrupting and foreclosing and just giving their properties back to the bank. Meanwhile, you're like, oh, there's this really interesting section of mezz debt or this really interesting private credit position that you guys can go into and did that. And so, how would you guys like? What's the difference between how you guys would underwrite second position loans or preferred equity differently than just kind of traditional equity that people would think about? Was there any difference there?
question. Yeah, I think good question. There's another window of opportunity. I'll tell you right now. I think, and there's one more thing I want to say, just to piggyback on whatever we were talking about. So let's say if you're the company who's investing in multifamily, strictly in one thing. So, and then you're going through this cycle of 22, 23, all right? Just to survive, because you call yourself multifamily real estate, whatever, you just need to buy what? Multifamily,
Yeah,
right?
you should buy, yeah, more. Yeah.
Yeah, you gotta get more. The reason why, because you call yourself that thing.
Mhm.
Inside of the Vista fund, so I'm not saying we just strictly multifamily thing. We need to buy a multifamily thing to survive, to get those fees and stuff like that. We have an ability to actually pivot without people saying, "Oh, you guys multifamily, well, now all of a sudden you're doing something else." No, we are the fund, and then when I started the fund, I said, listen, I don't want to be, it's great to be like focused on something, right? But if you're talking about diversification and actually
Mhm.
saving, this is diversification. If you're talking about making money, right? This is just hyper focus on one thing, right? If you're talking about diversification and saving, that's going to be like a broad spectrum of different products. Hopefully within the same niche, but then again, that's a different product. So you can pivot the things, right? When
Yep.
it's not working. So
And you had that in your fund docs, right? Like, or you, and sorry, I don't mean to interrupt. Are you guys like, are you a customizable fund, a fund of funds? Or are you guys just like a blind pool fund and you just have the ability to pivot your thesis if necessary? Like, what's that like for you? What's the
yeah,
structure
like
like?
on the fund level, but when the structure, we have a like one-off deals, remember, as a fund of funds. So we just coming in, there's a package of the documents saying we're going into the specific products.
Nice. Perfect.
Okay.
And you just have like an asset level LLC that you're investing in for that specific product. And then you kind of move to a different one. And you're like, hey guys, this is actually a little bit better than us. We're going to go on the debt side right now, or we're going to go on the lending side right now.
Correct.
That's cool. Perfect.
So the second question was, so what is the difference, right? And how different is that? If you're the bigger company, meaning you got to feed 50 employees, 100 employees, right, into the private equity. So you are chasing the big deals. So go out on the market and trying to find something to actually lend you, right? $10 million below, like between 1 and $10 million. And good luck, because everybody's saying how much you want to get, like 8 million. We're not gonna touch that, too small. Why? Because they want to get the fee on the back, like a big portion of the fees. So they will start to give you money at the $15 million mark, right?
Hmm.
And the reason why, because they get larger fees. So there's a window because nobody wants to touch 1 to 5, 1 to 5. And that's the difference, right? So when you go out to the conventional loan, so you need to qualify, you can, but then when you go out to the private funding, whatever the private equity or something, so they're going to tell you we need to get at least 10 to $15 million of funding. So that's going to create the opportunity. So that's the
Hmm.
biggest difference for us.
Yeah. So then you could bring in bigger check sizes. Are you mostly at that point? Are you raising from like family offices or institutions, or what type of people are you raising from at that moment? Because that's probably outside of the high net worth individuals, unless they're sitting on just a ton of dry powder.
Yeah, I mean, mostly it's a private rate, but again, probably like a high net worth. But then there is if you're talking about the organic food, we would love to get the family offices to that, because this is a little bit different. It's more opportunistic for people. Even for me, I feel like more comfortable. So, because people, they need to understand this is the deal whether you can lose money as well. The real
Mhm.
estate, you most likely not going to lose it, right? And it's I wouldn't call it VC funding, but it's still, it's a company, it's a business. The business is the most riskier asset, right? When you purchase the business. Look at the failure rate. That's good enough, right? To look at the failure rate of the real estate and then the business, right? The business ventures will fail like a lot of times.
Oh, that's good, man. Now, I know as we start to kind of like in the podcast and land the plane per se, I know one thing that you're really passionate about is athletics and then even like connecting the dots between athletics and investing. And so, how do you teach athletes or professional athletes to see passive income as a wealth vehicle for them? So, like passive income in real estate as a real wealth vehicle for them and not just like a buzzword. Because I think there's mental blocks that happen that people need to overcome in actually investing their money, but they hear it as like, "Oh, passive wealth, I wanna build this," but they don't actually pull the trigger. How do you help to teach or educate them to make that next step?
It's a good question. I think the one really good example would be like one good words I would say. I think it was Matt Lindstrom at the podcast. He said, "You will be." ex-professional athletes a lot longer than the actually
Mhm.
professional athlete, and it's really good words to put into the professional athlete mindset, and the reason why, because as you part of the league, sorry, as you part of the league, right? And you in that hype and you in that kind of machine, right? It's really hard to think outside of that machine. Really hard,
Mhm.
right? Majority of the things taken care of for you, you're not thinking what to do, right? You get insane amount of money every time, right? Every month, wherever the check is, like every 2 weeks, let's say the deposit to your account, and then you're not actually thinking through. It could be done tomorrow. It could be ended anytime, like any second. Right? Could be injury or whatever. And I won't think about it, but right, you're going to be a lot longer ex-professional athlete than you are a professional athlete. So, and then if it happens otherwise, that's fine. That's good for you. That's a bonus, right? Because we've seen some names, let's say James Harden, right? Or they playing for 20 years in league. That's insane.
That's crazy.
But it's not reality, right? Again, look at the numbers, right? How many people get cut every single year from the league? And this is the reality, right? This is not the hype. So, because we know the like a 5, 10 names, which is always on TV, right? We don't know the people who get cut every single year. So, if you don't take care on the year one, and again, that's a great actually example was our family was because we thought when we made it to the NBA as a family, right? My brother like was drafted by Clippers, so we thought it's gonna be forever. So, but then he got cut in the year 2, 1.5, right? A year and a half, he got cut from the league. So, and that was a great lesson, right? To learn. It's not actually to make it to the league. It's actually stay in the league. And then if you stay, right, what are you actually doing with your capital? Because everybody's saying, oh, you need to drive a certain car, you got to live in a
Mhm.
certain neighborhood. You actually don't, right? But you gotta take care of your future in the day 1, day 2 of the league, so and there are some really good athletes I know, they've been so humble and so frugal with their money coming in. So some of them, like, I don't say the names, they drive, like, very, like, normal cars, like Toyota and stuff like that. But then once they stopped playing, they were financially set, right? Because
Mhm.
they were doing certain things on the day
Yeah.
1, not on the last day, because they were saying, "Oh, we're gonna start, like, when we're gonna stop." No, they were doing this, and again, if it's too much for you, you can delegate it to somebody, right? So if it's just not too much, you might want to start to learn things, right? Go deeper into the things. And now there's a lot of different resources, a lot of different things you can do. And the syndication, this is what gives you the ability to do it truly passively. Because let's say you playing the league or whatever, you playing the sports, let's say, right? Professional, you get into salary. So you buying yourself real estate, that's going to be tough to do, right? Because
Mhm.
buying yourself more and more work. That was my example, right? So I start to buy those single family units. So yeah, but you buying yourself work. Essentially, you need to work on that project. And the more you buy, the more you work on it. So now you're taken away from the actually place where you really making money, right? When you really perform, when you're really making a difference for people. So,
Mhm.
so the syndication, that's a level of true passive investing. So, and a lot of athletes start like that. So because they don't want to like put their brain into that 100%.
It's such an interesting culture too when you think about, like, you get a lot of these young guys who get this a ton of money. They come into it, they wanna spend it all, and nobody's really telling them, and this is also a very interesting conversation that we probably should save for another time, is just talking about even just the NIL and how these young kids are getting all this money and how they probably need somebody to help them walk through how to manage this money or some sort of, like, guidelines, or else they just blow it when they need to be investing it. So, I'm sure that's something that you are passionate about and could talk about for days, but as we end this the podcast, the podcast is called Funds on Fire, and I'd love to know for you and your company, your fund, what's firing you up? Like, what do you have, or what are you guys doing that has you absolutely fired up for where you guys are going in the future?
Yeah, I think just helping people because I feel bad when I'm not useful, when I'm not helping. And my internal passion is just to help people to do whatever, to grow, to get to the next level. So in this case, it's just if you don't know how, it doesn't mean you need to be our client forever. Like, so we're gonna show you the path, right? You can do whatever you want then after. So, but then we'll show you the path from and one of the perfect probably examples will be I tried single family, so we invested in multiple things. We understand it's a burdensome. Some of them didn't work out. So what's next? And this is what I'm looking through the profiles of our customers. So probably 9% of them, they used to have single family investments, right? And they got one-off units or like four quarter, like something. And then they start to realize we cannot scale it to a certain point, or we don't want to scale it, right? Or want to phase out from this proactive investing phase, right? And they want to go into something else. This is our like perfect customer profile. So, and then at this point, we're saying, and that's why we're driven. So we showing you how to do it different ways, and then you don't need to be like quitting the game. You still be staying in the game and you can actually make more sometimes. And then you're going to be a lot more like not passive, like you're going to be not active, so passive, right? You can do whatever you want with your time.
Nice. Very cool. Well, good. And that's a good impact to make because one, that time that they get to buy back allows them to spend time with their family and doing the things that they love because they're not having to worry about single family properties, but they're able to, you've opened up the opportunity for them to be able to invest into something that's truly wealth building, truly almost like turnkey and passive, and truly giving them the life that they want. So that's really cool, man. Well, I've enjoyed this. This has been fantastic. It's been so cool hearing you, your story, the perseverance that you've gone through, and then also the way that you've been able to build something really great that you believe in, that you love, and that you can be able to leave that legacy for your family and kids, and then all the other kids that you guys teach. Where can people find you if they want to either one, invest with you or just follow you along? I know you've got an awesome podcast and things like that.
Thank you, David. Yeah, I enjoyed that as well. And they can just shoot us emails. So it's going to be invest@avistafund.com. So they can go and download the ebook, right? How to start the syndication. It's called winrealestategame.com. One
Nice.
of the pages, winrealestategame.com, because we'll have sports, right? So we're going to give you like ebook, how to start your syndication, right? Investing. And then lastly, they can go just to the website, avistafund.com. Check it out.
Nice, man. Well, cool. I appreciate you. Thankful for you, and thanks for being on, man.
Yeah. Thank you, David. Thank you, the listeners, right? I appreciate it as well. Have a good
Yes,
one.
sir. Wow. I hope you enjoyed that. I have a quick favor. If you've been enjoying the show, there's one simple way you can support us, and it's by hitting that follow button or that subscribe button on the app you're listening to. I want to level this podcast up in every single way possible, bringing you more value, incredible content and guests, and new strategies. Following the show and leaving a quick review goes a really long way in helping us to grow and continue to deliver top tier content. It's the only free thing I'll ever ask you to do, and it makes a bigger impact than I can possibly put into words. So, thank you for being a part of this journey, and I'll definitely catch you on the next episode. To great success and greater impact. Peace.